Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, June the 9th, a little over 20 minutes after market close, 4:24 p.m. Eastern time to be exact. And today we saw some nasty price action, a sell-off that really accelerated around the middle-ish of the day. We've got a pivotal CPI report coming out tomorrow. The market really hinges on that, even though we had this core price action today. We had the S&P and the Qs close at key levels. We saw all 5 of the major indices break below a key moving average. So we're going to get into all that stuff, and it should be a pretty quick and packed video today. So let's get right into it. Indices lose key levels ahead of CPI. Poor price action in general today across the board. G6 down over 3, S&P down 2.4, Qs down 2.7. Dow mid and small caps all down right around 2%, 60-40 around 1.6, and grow around 1.3. Market state still in short-term uptrend, but that could very easily change by the close tomorrow, depending on how the market reacts and what the price action looks like tomorrow. So keep that in mind. We had a very poor close today, but it is the first close of the 21, or first close below the 21 on the major indices. That could possibly be reclaimed tomorrow, but still short-term uptrend for now. But close to changing if we get poor price action again tomorrow, or more downside follow through. Some minor changes on the trend gauge here. Market leaders, this little small sub arrow was pointing green. That's now back to under neutral here. Short term, this was over here, the black sub arrow under bullish. That is now pointing back towards neutral with that first close back below the 21. Medium, we saw mid caps and small caps close above the 50, but now they have come back and closed under the 50 as well as the 21. So got over the 50-day for just a little bit and came back down below. So some small changes to the trend gauge. Again, if there is downside follow through, you will see these change likely tomorrow in Don's video as well. So let's get into the tail of the tape. But before we do that, let me just briefly highlight mainly this email right here, or if you go to our website, you can always call. But if you're interested in what we do, you want to know more about what's going on at Revere, have questions, just don't hesitate to send me an email, or don't hesitate to email anybody here, Dan, Tim, Don, or Merrill at revereasset.com. So let's get right to the tail of the tape. Sentiment ticking up in regards to the bearishness. Put call ratio slightly above 1 at 1.05. VIX up about 10% to around 26. Fear greed not necessarily changed today, at least at this point. Bear case, rally failure and break of 21 EMA. You see that right here on the S&P. First close under 21E. That's what we've got highlighted here. News, CPI tomorrow morning. We talked about that. ECB to begin quantitative tightening in July. So this is the big news that you're going to want to pay attention to tomorrow, as with inflation as big of a market mover as it has been. This is very important. Lots of eyes on this. Expect a decent reaction one way or the other after this report comes out. What were we watching today? Same thing. What will we do in this support range? And then this resistance, which has been resistance through this whole consolidation. What would happen there? So ultimately, support was broken. As you can see here, the lows of this consolidation right around 40.80, which was tested 3 times today before actually breaking below here. That's what happened. We lost that support level today. And so action wise, we're going to pull up a 5-minute chart. You can see we opened down 0.4, moved up just a little bit, almost to break even, roughly on, or flat on the S&P, down to 40.83. We based, came back up into the 4100, 4110-ish range, and then we ultimately sell off into the end of the day. So I'm going to show you that here on a 5-minute chart. So here's the open, down 0.4. Ultimately, we come up here and basically fill that gap, get to about break even here, like I said, roughly flat on the S&P, and then we proceed to come back down, make a new low of the day, kind of base a little bit here, challenge 4100 a couple of times, and ultimately we give way after testing this 40.80 level, which has been a big support level here, and giving way later in the day. As you can see, just a frozen slope down, buyers nowhere to be found, it seemed, in the second half of today. I'm going to show you a 15-minute just so you can see what I'm talking about here with this 40.80 level. So you can see right here, 40.73, 40.74, 40.80, roughly this area, and we talked about it, Don's mentioned this 40.74 area has acted as support. during this consolidation, but giving way today. So let's get back to the tail of the tape very quickly here. As you can see right here, we've got sector-wise, none green. We got a red to green reversal, a massive one on natural gas, and then tons of sectors red, really all of them. But IYT and XME the worst. Oil's having a bad day. Aerospace and defense, you throw a dart, it was having a bad day today. Beta moved down from 0.87 to 0.63. We sold Zim, LNG, and trimmed SSO. Bottom line, nasty action, breaking the 21 EMA on all of the major indices ahead of the CPI report. Prior close 41.16, down but still in that range. Today 40.17, break of support, terrible price action here. 21 EMA declining after today's action, right around 40.90. 50-day also continues to decline, right around 42.10. So let's go ahead and get into the charts here. I mentioned the S&P and the Qs closed at a key level. Well, that key level is 4,000. This is obviously a huge, huge support level, just a big level in general on the S&P. Anytime you've got a big round number like that, whether it's 4,000, 3,000, 5,000, those are big areas of interest, and they always will be. And that's kind of what we're looking at here. I don't think many people have probably expected us to go all the way to almost 4,000 today, but that is what happened. And as you can see here, it's a very big level. So 4,000, important psychological spot, something to keep an eye on here. And then on the Qs, similarly, and we've talked about this a good bit, 300, a huge psychological level as well. It closed just 60 cents below it. But same kind of thing here, closing at a really big psychological level, an area where it tried to find support initially, but was unable to back in April and May here. Or I guess that is May, excuse me. But again, poor action, breaking the lows of the consolidation on all the major indices, and on the Qs and the S&P closing at key levels here. We're going to run through these real quick here. The Dow, same situation, breaking the lows of the consolidation below the 21E. First close below the 21E, though. We want to keep that in mind. We're looking consecutive closes below the 21E. That's kind of what we mean when we say, okay, there's downside follow through, meaning we didn't make a quick reclaim of that moving average. IWM, which had been strong, as you can see, and I apologize, I had these stochastics up here. I'd forgotten I had them, but I do think it's actually really important here. So look at the stochastic cross here on IWM, starting to cross down from an overbought signal. And then the same thing here on MDY, after getting above the 50, coming back down below it, and now breaking the 21. You got the same basically situation here on MDY, doing the same thing on the stochastic as well. And again, MDY, this 450 level, a huge spot. So I'm going to take the stochastics off now that we've looked at that. So MDY, IWM, and really even SPY and QQQ potentially having the start of a bearish stochastic cross. Doesn't always mean that the market's going to go down, doesn't always mean that there's further downside ahead, but it's something you want to pay attention to nonetheless. We also had the dollar strong today, moving up pretty significantly for the dollar, up 0.75% here. This is important. Tim talked about it in his video yesterday. If the dollar goes up, that hurts equities, at least in the near term, and that certainly is what happened today, as it looks like the dollar is rounding off a nice support move here, or kind of a U off the 50-day. So the dollar moving higher back above the 21. Onto stocks. Tesla got an upgrade today. It was up towards 760, back above the 21, only to fall victim to a nasty reversal back down below the 21 EMA. Just a tough battle for Tesla to fight when the market and the big heavyweights are working against it. So Tesla, nasty reversal today after showing big time relative strength in the first half of the trading day. Poor finish along with the rest of the market. UNG actually making an incredible reversal, was down 7% at the open, finished up over 3%. Some wild volatility, as you can see, the last 2 days here on UNG. It finished yesterday down 7% after being up a couple percent. So more or less 10 to 12% ranges roughly on this ETF in the last 2 days. FTNT announced a split. This one managed to stay green, and to be honest with you, I don't quite know how, but managed to stay green today. But again, this is not necessarily all that constructive of a chart either. But FTNT announcing a split, and then you got DG, Dollar General, showing some relative strength today, up about 2%. You can see the RS line blue dot there. Moving along to the bad, and the main thing we want to focus on here is Apple. So if you watched my video on Monday, you know I was talking about this 145 level and these recent lows on Apple and how that was a really big spot, along with the 21 and the 8 EMA. Well, on Tuesday, Apple proceeded to go up and get back above the 8, get back above the 21 EMA after undercutting those lows. So we talked about that. That was kind of what you wanted to see if you were a bull and you wanted to see Apple get back above those moving averages. Well, what also happened is it made a lower high on the daily chart, as you can see, kind of got stifled here at 150. And then today it was a laggard from the open and continued to be weak as the day progressed, only getting weaker, as you can see, down more than the S&P, down more than the Qs, down more than the G6 was down today. And to me, this is a sign of distribution when you've got the biggest stock in the market down almost 4%, showing relative weakness all day. That is not a good sign. And that's why I said these stocks, Tesla and Apple, really Apple more important than Tesla, are so pivotal to the market right now, and they're at pivotal spots. So again, I would watch how Apple closes this week. This 145 level may turn into resistance. That's something to pay attention to as well. That 8 day is going to start moving down pretty quickly with it. Moving along here, just a couple more names, and then I will be done. Amazon, similar situation, had gotten back above the 21, the 8 today. Now we're back below it. Facebook, nasty move back off the 50-day here, kind of ran up into it. Similar situation, just not looking good here for Facebook. And you got to remember, Facebook had a huge sell-off, but this is still a $500 billion company. It still carries weight on the indices. So when Facebook does poorly, it still hurts the indices, along with Apple, along with Amazon. And when those names are having tough days, it's gonna impact the indices. Oxy, we also had oil have tough day. Oxy, arguably the strongest, one of the strongest names out there in the oil space, just slicing through the 21 like it's nothing, down almost 6%. And then some of the sectors that had the worst day today, XME down about 5%, and IYT transports down about 3%. Sorry, I don't know. I thought, see if I can get that. There we go. IYT down about 3%. We mentioned some of the sectors having a tough day today. Pretty much every single one of the sectors out there was having a tough day. OIH, this is the oil and gas services, down about 3.5%. Again, just not many bright spots out there. As you can see, the dollar may be one of the best looking charts in the market. And again, that is not a good thing for equities. So that is going to wrap up today's video. Keep in mind, very important CPI report tomorrow. I believe it comes out at around 8:30 Eastern. Don't know that for a fact, but it's somewhere in that vicinity. Keep an eye on how the markets react to that. If the markets gap up, keep in mind that there is a declining 21 now overhead that could act as resistance. But again, really important CPI report tomorrow, along with, you got the S&P closing real close to 4,000. You got the Qs closing real close to 300, right on some big levels here. So that wraps up today's video, everybody. I hope you have a great weekend. I'll see you on the podcast as well. But that is it for today's video. Thanks, everyone.